Yeah, I just was reading, to touch on Tesla for a second. We're an investor in SpaceX also. And they just sent a Tesla car around the sun, just past the sun. I was reading the paper the other day. Just went around the sun. That's pretty cool. So there's all these things that are happening in the world that are, they're providing growth. I mean, Elon Musk was talking about how they want to set off nuclear weapons and nuclear bombs in Mars to create an atmosphere. So, I was talking to Gwen Shotwell.
Can I just ask you? Go ahead.
So I was speaking with Gwen Shotwell about a couple of weeks ago, and she is the president and COO of SpaceX. And she said that, in her opinion, the only one who has a bigger vision than Elon for SpaceX is her. And she was talking about how she expects to get to other solar systems, other galaxies. That's where she thinks to perhaps meet whoever is there.
But Ron, sometimes you make these investments and it may take a very long time to pay off. It may not pay off. In the case of Tesla, I think your cost basis is $218.74. That's just around where the stock is trading right now. This is one that you've been.
Is that exact, Bex, or is that the?
Yes. I'm not sure. My point is that your cost basis. Not to say that this won't eventually pay off and be a great investment for you, but to this point, it has not been. It's something that you're waiting for because maybe it's got a long lead time. How do you determine between the ones that are going to pay off and pay off quickly? How long do you have to stick around? And what do you think about the Tesla investment right now?
Well, with Tesla, there are many investments that we've made where it's been a very long incubation period that we have made, which is taken for the investment to prove out. When we invested in Vail between 1996 and 2006, we made a very modest return, 50, 60, 70% over 10 years, and then we made 7 or 8 times our money. When we invested in Wynn Resorts for 2001, we were one of the founding investors. And Steve Wynn invested $250 million, and a Japanese investor invested $250. And he told me that there will never be another investor in our company except for you, if you want to invest. And I'd like to have you as an investor. And so we invested after we studied the land that he owned and what he was planning to do. We invested $25 million. That was at $20 a share. And then when he ultimately went public, he couldn't get 12 people to sit in a room with him. And it went public at $15 or $16 a share or $13 a share. And we invested another $25 million. No, maybe we invested $50 million at 20, and then 20. And then when it came public at 13, invested $7 or $8 million shares. And ultimately, the stock went to 150. And so it was down after we invested. It was down 2 or 3 years later. And then people would say, I don't want to invest because it's not going to be a casino for 5 or 6 or 7 years. We invested during that period. We invest all the time when businesses are growing. When Tesla's case, Tesla, when we invested in 2014, the revenues were less than $3 billion a year, $2.7 billion. This year, the revenues are going to be about $27 billion. So the company has grown 10 times in revenues since the beginning. Then they were sort of struggling and producing cars. And next year, I think they're going to do $35 or $40 billion in revenues. And I think in 2 more years, they're going to do $100 billion in revenues.
Ron, in October, well, just to run through quick numbers, you just answer these for me. In October of 2018, Tesla was your 8th largest holding. Today, it's your 13th largest holding. That's not because you've sold shares, I take it. Is that because the company's shares are less valuable or because you've invested more in other companies?
That's because we haven't sold any stock, that's because the shares in Tesla got us. So we talked about investing at $220 or $218. It went up to $380, and now it's back to $220, $225 with some self-inflicted wounds. And so we spoke about this, and I was saying that you invited me to come on when it was $380 and say take a victory lap, and I said it's way too early for a victory lap. There's no victory here, but I think that the opportunity here, there's 90 million cars a year that are sold, and our guy is now going to sell 350, 400,000 cars. Right now, you're able to expand in a time when no one else is expanding in the automobile industry. So they're able to build now in China with all the learnings that they've had in the United States. They're building for 70% less than it would cost for the same cars to build in the United States and 30% less than it would have cost to build a year ago. And so what I think is that when we started looking at Tesla 10 years ago, 12 years ago, the cost of a battery for a car was $100,000. When they went public, it was like $30,000 or $35,000. They're now somewhere a little bit over $10,000 on the way to $5,000. Then you had 200 miles that you could get in a battery. Now you can get 370 miles. Pretty soon it's going to be, this year, I think it's going to be over 400 miles. So the quality of the car has improved, the distance has improved, the opportunity has not shrunk. And in fact, the reason they have this opportunity is all these car companies have hundreds of billions of dollars invested in plants that make motors. So their business is making motors. That's what they do. They make motors. So if your competitive advantage is you make motors better than anyone else in the world, and some guy comes along and says, hey, you know what? All that stuff, all those motors you make, we don't need them anymore. Are you going to drop all the motors that you're making and go make a battery where you're 5 or 10 years behind? So Tesla has an opportunity because other people are sort of slow walking. The guys in Germany are finding their leading industry in Germany. I think that 1 out of 10 people in Germany is employed in the automobile industry, 1 out of 7, something crazy like that. And they're saying, why aren't you guys making battery cars? The reason they're not is the unions are heavily involved in the management of those companies, and all those jobs that they have in making cars will be lost. All those investments that they have are stranded investments in making. Volkswagen's going to be a competitor, but the other guys are just going slow about this. Volkswagen is really making a big effort. Other guys aren't. Oh, one more thing. That now the law in the United States and elsewhere is that they understand that when you burn gasoline, I have other ideas to talk about too, by the way. When you burn gasoline, it doesn't help the environment. Right. And so they say, okay, there's countries all around the world that are banning the production of gasoline cars. In addition to that, they're saying if you're producing, in 5 or 10 years, in addition to that, if you produce these cars, you have to get a credit by saying that you're also producing a not polluting car. The cars that Tesla has don't pollute, obviously, because they're working batteries. Tesla is now selling $800 million a year of credits, probably $1 billion this year coming up, of credits for giving their fleet to Fiat. Just for matching, for free. They're getting $1 billion. And so basically a free cash flow positive, $5 billion in cash. Go ahead.
Ron,
we're joined by star investor Ron Barron. He's been a firm, longtime supporter of Tesla, which is, of course, one of the year's hottest stocks. In fact, Ron first told us about the company's potential back in 2014.
The opportunity here is not for them to do 35,000 cars on the way to 50 or 100,000. The market is for 100 million cars a year. Like maybe they could do in 8 or 10 years, they could do 1 million or 2 million cars a year, but the potential, they could do 10 million cars a year in 15 years. So the potential is enormous.
And what a ride it's been. That stock soaring more than 80% so far this year. That's right, this year. And by the way, it's only February 4th today, so you're talking about 80% gains over the last month and a few days. Tesla's market capitalization is now $140 billion. It passes names like Lockheed Martin, Union Pacific, Eli Lilly, and Costco at this point. Ron Barron is the chairman and CEO of Barron Funds, and he joins us for the hour. And Ron, it's great to see you.
Thanks for inviting me.
Let's start with the obvious, with Tesla. This is a major holding for you.
So we could do Tesla, or we could start off with a little bit about processing and get into Tesla to show you where we got it from, whatever you want to do.
Well, let's just start talking about, let's work into the processing part of this. Let's just start off talking about the ride that we have seen, let's just say, over the last month or so. What have you thought as you've watched the stock go up 80% from $400 and change to this morning looking at $836 in the pre-market?
Well, you got to remember that 2014, when we were buying our stock, about 1.6 million shares at an average price of $219. And as you know, since I've been on the show several times since, the stock went between 350 and 180 and 250. So it's all over. And that period of time was when this company wasn't profitable, was expanding rapidly. They was being criticized by short sellers. It was very difficult for them to get started because dealers would try to prevent them from selling cars in individual states. But now things have all come together. And but in the period of time since 2014, the stock price didn't change very much through last summer. So through last summer, our $219 stock was $230, $240. So we made 10%, 20%, 30%. At the same period of time, the company's business, we focus on business, not stock prices. The company's business had grown from $2.8 billion of annual revenues to $25 billion of annual revenues, eightfold. So the company's up eightfold, stock's up 20%, 10%. Now what's happening, this is just catch up. Now this year, Tesla is going to do somewhere around $32 billion of revenues. And I guess that they're going to do $100 billion of revenues within 4 years. And I think they have potential for $1 trillion of revenues within 10 years. So basically, you're looking at the very start of what's going to happen with Tesla. This could be one of the largest companies in the whole world.
$1 trillion in revenue in 10 years?
That's assuming you do 10 million cars. There's 90 million cars or 95 million cars that are sold, yes. And that's without the battery business. So I'm thinking that we're thinking $750 billion to $1 trillion of revenues just on the car business. Elon says that the battery business is going to be as big as the car business. In addition to that, when I'm thinking about 10 million cars a year, the last conversation he had, he said it was 20 million cars is what he thinks he can do. And so what we're talking about is a business that right now, demand is overwhelming for the product that they're selling. And they're constrained as far as making as many cars as they could sell because they don't have enough batteries. So now there's a nice announcement today about Panasonic making money in the plant they have in Reno. But they need to have more batteries. So they're going to have a battery day in a few months. They're going to have all the analysts coming out and they're going to show how they're addressing the issue of where are these batteries going to come from to make all these cars that are possible to make.
You're clearly still very bullish.
Yeah,
but it's moved 80%. It's moved 80% since the beginning of the year. Just in terms of discipline in maintaining a portfolio, do you lighten up on any of that position at all? Because you think, I still have a large position, even if I sell a little and book some gains. Or no, you're holding the whole thing.
Not a share.
Not a single share.
No. And in fact, one of the portfolio managers was speaking to me yesterday, and he said, "Ron, shouldn't we sell a little bit?" I said, "I'm not selling anything. This is the very beginning of when Teslas get started."
Ron, so here's the question.
I'm hoping we get more assets so we can buy more
make
stock.
it the #1 car maker in the world.
Well, I think Toyota's
about 10 million now.
A little bit more, 12 or 13 million. But a lot of those companies are. I'll deal with the competition in a moment. But go ahead.
Well, no, so that was my question. I was putting Toyota in the 10 to 12 million category. Effectively, Tesla has to become the next Toyota for the numbers to be what they are.
Yes.
And so the question is, how you consider the competition and why you're so convinced that they will be the next Toyota, if you will.
So the question ought to be, well, how come, if it's so easy to make a car, it's so difficult to make a car, and how could Tesla possibly be successful? And how come the other automobile companies can't just crush them? Why can't they do that? And there's two big issues that the existing automobile companies, let's say they sell 90 million cars a year, and let's say it costs $5,000 of capital spending per car in order to make 90 million cars a year. So they're invested $450 or $500 billion in their existing facilities. That's making, probably 40% of that is making motors. So basically, when you're transferring from an internal combustion engine into a battery, so here you're Toyota, or you're General Motors, or you're Ford, and I come along and I say, hey, listen, we don't need to make those engines anymore. Let's use my battery. And you've already got these, $200 billion invested in engines. Are you going to really stop that? So that's one challenge for automobile companies. In fact, the automobile manufacturers in Germany were fined by the regulator saying, how come you're not moving faster on making electrification? The reason they're not, of course, they're going to obsolete all those investments they have. That's stranded assets. So number one, financially, it's very difficult because they have to invest as much in making electric cars as they're going to have to write off in motors. And where's that money coming from? That's one. Number two, the challenge is that the dealers distribute these cars all around the country, franchises, irrevocable. And the dealers make money not on selling metal, but on servicing the cars. So if you have all of a sudden a replacement, and that's all the distribution, and if you have all of a sudden a replacement of engine that has all the service requirements with a battery that doesn't have any, and you have the parts that are so few compared to thousands in a regular car, why should a dealer, when you call up your dealer and say, I'd like you to sell the electric cars instead of the gasoline engine cars, what are they going to do? They don't make their money that way. So they have to totally revamp the whole strategy.
Incentive system.
Yep.
Hey, Ron, I've got a question from Rick Reeder over at BlackRock. He's a Tesla owner and a huge fan. He actually sends his congratulations along, says that you saw this long before anybody else did. Now there are all these analysts who are kind of jumping on board with this. But as an investor, he said you should be congratulated for what you saw so early. But he does have a question. He says at today's valuation, it's going to take a long time for the cash flow to catch up. At what point do you think the valuation is too far ahead of the medium-term cash flow potential?
Well, at the last conference call, Elon noted that I'll get to that in just a moment. Elon noted that the demand for the Model Y is going to be greater than the Model S, X, and 3 together. So that's number one. So you have that big increment of demand coming on. Number two, Cybertruck, he said, is going to be in such demand they can't foresee how they can meet demand for 3 or 4 years. So that's another one. Then they have the big 16-wheeler truck. That's going to come on sometime. Then you have autonomous driving. That's going to come on sometime. Then you have the replacement of the peaker plants for utilities with these massive batteries. That's growing 100% a year. That's going to come on sometime. And then 10 years out, there's still a lot of growth coming because you're going to have these autonomous fleets of cars. And then in addition to that, you're going to have logistics business like Amazon has. So basically, you have, it's not just the next 10 years that's going to be this phenomenal growth. You have years after that. And we're talking about a business that's growing 50% a year. So if I'm thinking that in 4 years, they're going to do 100 or 120 or 130 billion dollars of annual revenues, and say they make a 15% profit margin, operating profit, that doesn't mean they're reporting it because they're going to take money and spend it to grow faster. So we make a lot of money by investing in businesses that are building factories, that are launching satellites, that are building hotels, casinos. And so while they're building them, they're not making money from those investments. Tesla would be building factories, and that's when we're investing in it, when that's happening, and penalizing profitability. So how much is this worth? If you have $15 billion of profitability, so-called, in 4 years, why wouldn't that be worth $300 billion in 5 years, 4 years? And then on top of that, if you get out to, I forget the roofs, the solar roofs, that's another $40 or $50 billion business a year. And that's just starting as well. So there's all these increments, and the demand is growing so rapidly. He says that he's going to grow 50% a year, 50% a year for as long as the eye can see.
Do you care? They say that they are now building towards profitability. They've been profitable to this point. Do you care if they don't have profits from time to time? Do you care if it's not a straight profitability shot? Are you okay to stand by with that?
Well, he's got $6 billion in cash right now, and up from $5 billion in cash at the end of the prior quarter. He generated, after spending a lot of money, generated $1 billion of excess cash right now. And this company also, it's the only growth company in the industry. When he bought the plant in California, in Fremont, it was bankrupted by General Motors and by Toyota. And it was a $1 billion plant. He got it for $50 million, 50. Looked at it and said, I don't know what to do with this place. What's going to go on here? And so then they spent on it originally, and they didn't know how to make cars so well, and they spent $15,000 of capital for every car they're going to make. Right. And that investment is producing a gross profit of about $10,000 a car for a $50,000 car. In China, now they know how to do it. And in China, the factory there cost $4,000 a car for capacity. That car, that they're going to sell it for less there, maybe in the 40s instead of close to 50, but they're going to make $10,000 in profit a car. So the return on investment is amazing. And then in addition to that, the suppliers are so anxious to do business with Tesla, they give them terms. You don't have to pay for what we're giving to you for 60 days. And they, from the time they take an order,
they give them those terms, or Tesla forces those terms on them?
Well,
I'm guessing they're not offering them up.
They're a monetary institution. They're trying to make money. Right. But the suppliers give them 60 days. And our guy, from the time he takes an order to the time he gets paid for it, after he sells, makes the car and delivers it, is 30 days. Right. So basically, the suppliers, he's got negative working capital in this business. So Rick, what's it going to be worth? I mean, gee, and I can't see how, of course you can see, but my idea is that in 10 years, this is going to be at least $1 trillion of revenues, and it's nowhere near ended at that point in time. There's a lot of growth opportunities from that point going forward.
The ringtone on my phone is Elon Musk saying, boring, boneheaded questions are not cool from that conference call several quarters ago, when clearly he was under a lot of duress, et cetera. There was, let's call it those times of his troubles. How's he doing?
I think he's doing really well. And now that he's profitable and generating cash flow, and employees are happier because they're making so much money because their stock price has gone up, and he's being praised instead of torn at. So I think he's doing much better. And he also sent me a note a couple of days ago, and I was telling him about my Egyptian dancing that I was learning, and he told me and I said I wasn't sure I was going to be able to do it, but he told me he had great confidence I could do it, so I did it.
Well, let me ask you a question. Have you ever doubted in the story along the way since you've been an investor?
Well, I told him originally, and I'm sure I told everyone else as well, that I wasn't sure if he was going to be successful. I gave it a good chance. Initially, I thought it was unlikely when he came public at $30 or $35 a share. Changed my mind when I realized I was wrong and the stock had gone from 30 to 80. And I was out in California with Mike Lippert, and we were visiting one of our portfolio managers. We were visiting with Elon for a couple hours, and Mike had a cutout early. And after they said, "Oh my God, Mike, at least you're smart enough to have invested in Tesla. I can't believe I didn't." And he said, "Ron, I sold it." I said, "You sold it? Are you kidding? After you just listened to what he said, you sold it?" He said, "I sold it before." And so I watched some more, and I said, "I have to own this." And I started buying at 160. So here at $30, I didn't buy. I started buying at 160, and it took me 2 years. Took us 2 years to buy, and I thought that I was going to be likely successful at that point, even though 50 car companies have failed in my lifetime. I said, this one really has a chance. They sent out a car to my house to East Hampton to drive and see if I could, Anyway, that didn't work out great, but
What'd you do? You hit something?
Did you have an accident?
No, I got into the car, and it was a prototype model, and it was hard to get into.